save the day, does it? So a beautiful day, and then right here, we get right into where we're about to have that discussion. Boom, we have the discussion, and bang. Now, we get a great set of numbers from Nvidia tonight, and then we'll have to wonder what they matter tomorrow. Will they matter? If the president ruminates on Taiwan tariffs or China tariffs, 25, 50, who knows if it'll matter? Now, speaking as a citizen, I have no problem with these tariffs, if only to protect against unfair trade practices. But as someone who cares about the stock market, I can tell you that we're entering a new, more mercurial world where we have to start worrying about the president's public appearances because we don't know which country, which continent, which ally he is going to attack next. Maybe in this sense, the Russians are lucky. In 2021, they ran a $23.3 billion trade surplus with us. Now, that's way down thanks to the sanctions we hit them with after they invaded Ukraine. No matter, this market's decided that as much as it matters if there's good news, like Nvidia, what matters more is that we have very little certainty on trade policy, aside from the fact that the president loves tariffs as much as he loves making headlines. Now, I don't want to obscure the company with a stock that I always say own, don't trade, Nvidia. After the close, it was a very good quarter. Everyone thought this would be the most eventful quarter of earnings season, but it was a non-event. Why? Because it was terrific, and Jensen Huang gives us terrific numbers. He's about as steady as the president is mercurial. The company put up solidly better than expected sales and earnings with strong guidance for the quarter, driven by the strength of their new high-end chips, Blackwell chips, fantastic, bravo. While we still have to worry about tariffs and export restrictions, I have to tell you the numbers were excellent. But let's talk about another situation.
Now let's break down this next part. Will Nvidia's strong numbers matter tomorrow? And the answer isn't always straightforward. Even positive earnings can be overshadowed by broader economic concerns. In this case, tariff talks on Taiwan or China. Here's why that matters. Tariffs can significantly impact supply chains, especially for tech companies that rely on overseas manufacturing. Nvidia, for instance, is heavily linked to Taiwan's semiconductor industry. So, if the president enforces new tariffs, Nvidia's costs could spike, and its profit margins may take a hit, even with impressive earnings.
Take a look at tech stocks. Joining us now is Doug Clinton, Intelligent Alpha founder and CEO. Doug, great to have you with us. How far can the tech trade go without Nvidia?
I think it can still go further. I mean, if you look at the broader set of the Mag 6, we always look at this. The PE ratio for this year is 27. It's 23 times for next year. So even without Nvidia, I think stocks like Google, Meta, Amazon can carry the tech trade. But I don't know that we should assume that Nvidia can't participate here. You know, I do think that their earnings last week were good despite the stock's reaction. And I think right now the question is maybe a little bit less about the fundamentals around the AI trade. Are these hyperscalers still spending? And it's more just a question of emotions in the market. When will investors feel comfortable coming back to the table for AI?
Nvidia still hasn't been able to achieve pre-DeepSeek levels. I mean, it feels like there is an inherent concern about how much of a spend will be needed. And granted, the hyperscalers have announced or confirmed or even upped their CapEx spending forecasts for the year, but there's no saying that Meta has to spend that much money by the end of the year, or that Alphabet does as well.
There is not, but I also think if you really put it into perspective, you think about the hyperscalers, they're really all competing with each other. And in some senses, it's this, we've called it a Pascalian wager before. I mean, if you believe in AI, you really do have to invest into the technology because, let's say Microsoft drops out of the race. I don't think that means Google or Meta are going to drop out because they see a future where AI is the next transformative technology and potentially $1 trillion opportunity for them. And so, no, nothing is certainly committing them to these step-ups that they've made. It's been about 30%, by the way, from the beginning of the year on these CapEx builds.
Right.
But I think that we should rely on them probably doing it.
And just quickly, Doug, Intel had some headlines today that some chip companies like Broadcom were sending test chips through their factories. So we're seeing a boost in shares of Intel's pre-market. Do you believe in investing in sort of the dogs of tech for the year? I mean, for the year, it is up somewhere around 20%.
It has been a contrarian play that has worked. We have not been involved in it. And I would say this, if you think about the chip trade more broadly, I would rather look at a TSM. Obviously, people are trying to diversify around TSM. There's some geopolitical risk there. But still, right now, all roads lead to them. Whether you make memory, whether you make GPUs or custom silicon, you're really probably relying on TSM.
And this is where market psychology comes into play. Investors love certainty. Right now, the AI boom is full of assumptions rather than guarantees. Will Meta really spend all that money? Will Alphabet? Until those investments materialize, Nvidia's stock might struggle to regain momentum, even if its fundamentals remain bulletproof.
Let's get more on Nvidia's report on the state of the AI trade. Stifel's Ruben Roy joins us now. Ruben, great to have you with us here on set. What did you make of the quarter?
You know, within the context of all the moving parts going into the quarter, I really don't think it could have gone much better. I think Jensen and company, laid out the vision, laid out the plan for the rest of the year, and I think, things really went well. You had technical issues for Blackwell, you had the DeepSeek event, you had tariffs and all kinds of things, and then, the overarching theme of how long is this CapEx cycle going to happen, or how big can it get? And we went through December quarter earnings, and every hyperscaler raised their CapEx pretty much, right? Google went to $75 billion for the year, up from consensus expectations in the low 60s. So I think it went really well. Maybe a couple things we could nitpick on, margins and otherwise, but overall, I think it was a great quarter.
So why do you think the markets are so skeptical? I mean, I imagine that today was a very busy day for you. You spent all day talking to investors and clients, et cetera, about this slide into the close.
Yeah.
How skeptical are people of the AI story at this point? Because it's obviously Nvidia didn't say anything.
The key takeaway here is that AI isn't just a passing trend, it's the battleground for the next wave of innovation. Companies like Microsoft, Google, and Meta aren't just experimenting with AI, they're reshaping their entire business models around it. So even if one slows down, another will step up, ensuring the momentum in AI development doesn't stall anytime soon.
Jensen went full court press. He did the conference call, then he did a 20-minute interview on CNBC, and the stock still slid into the close today.
Yeah, I think I heard the term, shoot first, ask questions later, and I think there's a lot of jitters in the marketplace. I mean, kind of what's next? We've got this event. Probably, there is a little bit of a de-risking, which is great, but then what, right? So in our view, we've got a catalyst coming up in a few weeks' time. NVIDIA's going to have their big tech conference, GTC, which I think is going to be really interesting in terms of product roadmaps, technology, and otherwise. But, until then, what are we playing for, I guess, short term is sort of what's I think in the market today.
Well, Ruben, maybe we're just playing for a valuation argument that at some point says this is really attractive. I mean, relative to peers, and I would just say also help us understand within your coverage, especially in the semiconductor space. I mean, where would you rather be, given at least, and the concerns around AI are certainly not places that I think there's really almost anyone else that can even be in this game. So talk about valuation and talk about relative value to the peer group.
I mean, it was cheap this morning when we were pitching it to investors. And
even better. Got better.
We liked it this morning. We love it now. Down in the low 20s on next year's earnings, right? And numbers didn't move much, right? But you have a ramp coming. We want to play for the Blackwell ramp. It just started. It's going better than we thought, but second half, bigger ramp potentially. So a stock that's trading in the low 20s on forward earnings with margins, people are kind of complaining about 71% gross margins. I've been covering semiconductors for 25 years. That's pretty good. And as you guys know, NVIDIA is not a chip company. It's a system, software, and solutions company. And I think margins are going to go back up into the mid-70s as Blackwell, continues to ramp throughout the year. And you've got, other things, networking coming back, software coming back, et cetera. So I think the stock's cheap. It's the best way to play AI compute. But yes, I think AI investment, it's a broader investment cycle. There's networking companies out there. There's a lot of other companies that are, I think, part of this, boats rising with all tides that NVIDIA really is driving. So we're still in kind of full-bore AI investment cycle.
So, Ruben, thanks for being here, first of all. I thought he spent a lot of time on the call trying to talk about inference as actually needing much more compute than we had originally thought.
This should have been a major win for Nvidia. Instead, we're seeing a market that remains skeptical. Despite blowout earnings and a strong outlook, Nvidia's stock slid into the close, raising an important question. What are investors so afraid of?
And so did you buy that, and how do you think that translates into the story?
Yeah, I do buy that. I am, and it's not just Jensen talking about it. We talk to supply chain folks. We talk to other users of, various methods of AI compute. But I think something gets lost is, you need a lot of compute for training, and then we could do inference on our iPhones. I don't think it's that simple. I think the definition of inference across workloads is very wide, and there are inference use cases that require massive amounts of compute. And the other thing that's happening, I think DeepSeek is showing this, is that the world's changing very quickly, right? When you get to post-training models and we get to kind of distillation of other models and trying to figure out reasoning and otherwise, there's a lot of compute intensity. So that's what's going on. I think the world really hasn't figured it out yet. So when we talk about custom chips and custom solutions, I think NVIDIA is kind of approach of a GPU, which by nature is quite flexible and programmable, and workload independent. I think there's a lot of merit to that as we figure out where the workloads are going. I still think we're in the very early innings of an overall AI investment cycle, and inference is, in our opinion, absolutely going to be long-tailed.
If there's one thing to take away from this, it's that Nvidia's dominance isn't slowing down anytime soon. Despite short-term volatility, the company remains at the center of the AI revolution. And while other companies are catching up, Nvidia's ecosystem of software, networking, and full-stack AI solutions gives it an edge that no one else has matched yet. The end. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.